Hello and welcome to this episode of Compensation Insider. So today, as we are in the renewal period for many companies to review whether they will change the content or the provider for their health insurance schemes, I wanted to go through a certain number of terms related to health insurance that will be useful for HR, but also for employees, so that they understand how the system works for them and how the different elements work together. So here is the first one is premium, and the premium is the amount that is paid for providing the health insurance, whether the insurance is used or not. So an employee might not go to see a single doctor during the year. The health insurance premium still needs to be paid. And usually it's a payment which is split between the employee and the employer, where the employer often takes the majority of the payment. It's really often maximum to have the employee pay 50% of the health insurance premium. So once you're insured, you go to the hospital or to see a doctor, and there are a number of things that even as a plan member, you need to pay. And the plan member is either the employee or their dependents if they're eligible, depending on the insurance and the family composition of the employee. So the first payment is called Copay. And Copay does not exist in all insurance plans, but when it exists, it's the dollar amount which is paid by the plan member at the time of getting the service. It's typically a flat fee. So in the Dubai, for example, that might be 50 dirhams, for example, I'm making up a number, every time you go see a doctor. And that's before any other costs are decided or attributed to the employee or to the health insurance. So the first one is Copay. Then the second element of payment is deductible. And the deductible is an amount which is paid upfront by the plan member for benefiting from the services that are provided under the plan. So basically, it's the amount paid by the employee before the insurance company starts to share the cost of treatment with the employee. So it's kind of like an out-of-pocket, and it's often stated as an annual amount, which means that if, let's say, a doctor visit is 25 euros, and you have a copay of 100 euros, and you only go to see your GP every month, for example, because you need to renew some prescription or something like that, then in that case, the first 4 visits, you would have to pay the full amount, because your deductible is 100 euros, which is the price of 4 visits to the doctor. So you have to pay that amount before you start sharing the cost with the insurance policy. Then once you get to that amount of deductible being paid, then the co-insurance is going to kick in, which means that the remainder of the cost is going to be split between the plan member and the insurance company. It's typically a percentage of the cost. For example, the plan member is responsible for 20% of the cost. Now, most policies will have an out-of-pocket maximum, which is included in the policy, which means that is the maximum that a plan member would have to pay in a year, be it for copay, for deductible, or for co-insurance, before the insurance covers 100% of the cost. This is very important for people who have either, like long diseases that necessitate constant visit to the doctors, or in case somebody gets, for example, touch wood, cancer or something like that. They're covered by the out-of-pocket maximum, means that the cost for the employee will never be above that. Once they've reached that out-of-pocket maximum, the insurance will cover 100% of the cost. Now, when you go visit that doctor to the clinic or to the hospital, there are 2 types of providers. There are in-network and out-of-network providers. So the plan comes with a list of service providers who are included in the plan. And if you go as an employee to an in-network provider, their health insurance card is accepted, and the employee only gets charged as per their insurance plan. But if they go to an out-of-network provider, they must pay in full, and then they will have to file for reimbursement by the insurance company, which may or may not be covered in full. And the end cost might be higher, generally speaking, because the out-of-network providers have not negotiated specific prices for the different services beforehand with the insurance company. So out-of-network providers tend to be overall more expensive for the employee, for the employer, and for the insurance company. Now, sometimes you get an option for a rider or optional additional coverage, which is things that are offered for an additional premium. So for example, you might have a choice to add more maternity cover, more dental, more pre-existing cover for pre-existing conditions, and so on. Talking of which, a pre-existing condition is kind of a personal illness or health condition that existed before the person enrolls in the plan. So that could be things like, for example, I don't know, asthma or diabetes. And it will usually only be covered by the insurance after a period of time has passed since the first enrollment. So often it's 6 months. So which means that once an employee joins your company and joins your health insurance plan, if they have a pre-existing condition, they might not be covered for any claims in the first 6 months, for example. It could also be that some pre-existing conditions might not be insured at all. So you have to be cautious of those. And talking of which, the exclusions are typically things which are not covered by the insurance company. So of course, temporary exclusion is the time, the waiting time for the pre-existing condition before it becomes covered by the insurance. It could be the access to certain hospitals or clinics that are specifically denied in the scheme. And so if the employee goes there, it's a full exclusion and sometimes does not get even reimbursed at all, unless there's a pre-approval by the insurance company for a reason X or Y. And what often is an exclusion are some specific treatments. So depending where you are and depending on your company, some treatments sometimes like fertility issues, treatments, psychological or psychiatric for personality or behavioral disorders, sleep disorders, cosmetic surgery, obesity treatment, addiction treatment, and so on might not be included in the services that are paid for through the health insurance scheme. So that's it. I hope that you found this useful. Don't hesitate to share it also with your employees at the time you're communicating about the renewal of your incentive scheme, or even throughout the year. This is good information for people to have so that they understand how much of costs they might have to be out of pocket of when they go use the health services, and allows them to hopefully choose a provider who is in network, and making sure that they have as little as possible that they need to pay by themselves before they get reimbursed. Thank you very much, and see you next week on Compensation Insider.